Hello, friends. In just 2 days, July begins, and this month brings 5 specific financial situations that are going to cost Americans money. Some involve deadlines that are already closing in, others come from new fees appearing at the checkout counter, and some are automatic payments that will quietly leave your account whether you're watching for them or not. Today, I'm walking through all 5 in order of urgency, starting with the one that expires in just 10 days and cannot be extended. Before we dive in, subscribe to this channel right now and turn on the bell. Financial deadlines in this country don't send reminders, and they don't grant extensions just because you didn't know. Subscribe now and let's get into it. The first item is the most urgent, and you need to act before July 10th. Not the end of the month, not when you get around to it, but July 10th specifically. A federal court ruling called Kwong versus United States, decided in November 2025, found that the IRS improperly charged failure to file penalties, failure to pay penalties, and underpayment interest during the COVID-19 federal disaster period. That period ran from January 20th, 2020 through July 10th, 2023. The court held that under the tax code provision governing federal disaster declarations, all tax filing and payment deadlines during that period should have been automatically suspended. This means the penalties and interest the IRS assessed during that window may have been improper. In May 2026, the National Taxpayer Advocate issued an urgent public statement saying that tens of millions of taxpayers may be entitled to refunds or abatements of these amounts. But here's the critical part. The relief is not automatic. You must file a claim, and for most taxpayers, the deadline to file that claim is July 10th, 2026. The form you need is IRS Form 843, which is the claim for refund and request for abatement. It's free to download from irs.gov. Across the top, you write Protective Refund Claim pursuant to Kwong versus United States. You file it for each tax year where you paid penalties or interest on obligations due between January 20th, 2020 and July 10th, 2023. Then you mail it certified to the IRS Service Center for your filing address. Before you act, there are 3 important things you need to understand. First, the Kwong decision is being appealed. The Department of Justice is expected to challenge it, which means the refund is not guaranteed. What filing by July 10th does is preserve your right to the refund if and when the law is finally decided in the taxpayer's favor. If you don't file by July 10th, the statute of limitations closes on your claim permanently, regardless of how the appeal turns out. Second, this applies if you paid IRS penalties or interest, not just if you owed taxes. Even if you filed your returns on time and paid your taxes but were separately assessed a failure to pay or underpayment penalty during that window, that penalty may qualify. Third, H&R Block confirmed in a June 2026 guidance article that they're helping clients prepare these claims. You can also file on your own. Now let's move to the second item, which is an extra fee that's starting to show up at the register this summer. Most consumers don't realize they're now being legally charged for something that used to be absorbed by the merchant. Credit card surcharges are additional fees added to your transaction when you pay by credit card, and they're now legal in 48 states as of 2026. Merchants are increasingly activating them, driven by rising credit card processing costs. Over 60% of small and mid-sized businesses now use some form of surcharge or dual pricing program. The surcharge can legally reach up to 3% of your transaction under Visa rules and 4% under MasterCard rules, though states have their own caps. Colorado, for example, limits surcharges to 2%, and several states require them to reflect only the merchant's actual processing cost. In practical terms, a $200 grocery run paid by credit card can now carry a $4 to $6 surcharge that didn't exist a year ago. A $150 restaurant bill paid by credit card can add another $3 to $6. These charges are required to be disclosed before you complete the transaction, either on a sign at the store entrance, on the checkout screen, or on the receipt. But disclosure doesn't mean you had advance notice before you arrived. The way to avoid paying these charges is straightforward. Pay by debit card or cash. Debit card surcharges are prohibited in all 50 states under federal law. If a merchant adds a surcharge to your debit card transaction, they're in violation. The surcharge only applies to credit cards. If you routinely pay for groceries, pharmacy runs, gas, and restaurants with a credit card, the cumulative monthly cost of these surcharges is worth paying attention to. A few states still ban credit card surcharges entirely, including Connecticut, Massachusetts, and Maine. If you live in those states, merchants cannot legally charge you a surcharge. If one appears on your receipt, you have the right to dispute it, and the merchant is subject to fines. The third item is a mid-year tax check that the IRS doesn't send a reminder about, but it catches people with unexpected bills. July 1st marks the midpoint of the tax year. For anyone receiving income that doesn't have automatic withholding, like pension payments, Social Security, IRA distributions, self-employment income, part-time work, or investment income, this is the moment to verify that you've paid enough in estimated taxes through the first half of the year. The IRS requires estimated quarterly payments if you expect to owe $1,000 or more in taxes for the year beyond what's withheld from any source. If you underpay, the IRS charges an underpayment penalty, currently running at 8% annualized on the shortfall. There's a specific trap that's catching many seniors in 2026, and it involves the interaction between the new $6,000 senior deduction from the One Big Beautiful Bill and their estimated tax calculations. Many seniors and many tax advisors haven't yet recalculated their estimated payments to account for this new deduction, which can significantly reduce taxable income for anyone 65 and older. If you've been making quarterly estimated payments based on last year's income and last year's tax rules, your payments may be either higher or lower than they should be for 2026. The mid-year point is the right time to recalculate. The second quarter estimated tax payments were due June 16th. The third quarter is due September 15th. If you haven't yet verified that your year-to-date estimated payments match your projected 2026 tax liability, especially accounting for the new senior deduction if you qualify, September 15th is the next opportunity to correct any shortfall before it compounds into a larger penalty at year-end. The fourth item involves an insurance premium adjustment that's changing how much comes out of your account this month. For anyone enrolled in Medicare Advantage, Medigap, or a private supplemental insurance plan, July can bring a premium change that doesn't arrive with a clear explanation. Insurance companies and pension systems conduct mid-year administrative reviews, and some plans adjust their premium deductions starting in July. This might be a switch from one billing timing to another, or it could reflect a mid-year rate change that was disclosed in paperwork most people didn't read carefully when it arrived in the spring. The practical check for this month is simple. Look at your bank account or the deduction line on your Social Security statement and compare the July amounts to June. If the number changed either higher or lower, call your insurance provider and ask specifically why the amount changed and whether it's a permanent adjustment or a one-time catch-up. One-time catch-up deductions happen when a billing timing shift causes 2 months of premiums to be collected in a single month. A premium increase is different and warrants a question about whether it reflects a plan change you agreed to. If you didn't receive advance notice of a premium change, ask the insurer when it was disclosed and request a copy of that disclosure. You have the right to know what you're being charged and why. The fifth and final item is a Social Security payment timing shift that catches some recipients off guard every time it happens. As covered in a recent video on this channel, July 2026 brings a calendar anomaly that affects 2 specific groups. If you began collecting Social Security before May of 1997, or if you receive both Social Security and SSI at the same time, your July payment arrives on July 2nd instead of the usual July 3rd. This is because July 4th falls on a Saturday this year, which means the federal holiday is observed on Friday, July 3rd, and the Social Security Administration moves the payment to the preceding business day, Thursday, July 2nd. For SSI recipients, the anomaly is more significant. Your regular July SSI payment arrives July 1st as normal, but your August SSI payment arrives early on July 31st because August 1st falls on a Saturday, and the law requires the Social Security Administration to issue the payment on the last business day before a weekend. This means 2 SSI deposits arrive in July and 0 arrive in August. If you spend both July deposits in July thinking you received extra money, you'll have nothing in August when your regular bills come due. The check to make in July for SSI recipients is this. On July 31st, when that second deposit arrives, set it aside completely. Don't spend it until August 1st. Treat it the same way you would treat your August payment arriving on its normal schedule, because that's exactly what it is. So here's the complete July financial picture. File IRS Form 843 by July 10th if you paid any federal penalties or interest on tax obligations due between January 20th, 2020 and July 10th, 2023. Write protective refund claim pursuant to Kwong versus United States across the top and mail it certified. Know that credit card surcharges are now legal and active in 48 states, and switching to debit or cash eliminates them entirely. Verify your year-to-date estimated tax payments against your projected 2026 liability, accounting for the new $6,000 senior deduction if you're 65 or older, before the September 15th third quarter deadline. Check your July insurance premium deduction against June and call your insurer if the amount changed. And if you receive SSI, set the July 31st deposit aside completely as your August budget. Subscribe, share this with someone you know who needs to hear it before July 10th, and I'll see you in the next one.